The IRS just made a huge inflation adjustment that can put an extra $500, $1,000, or even $5,000 back in your pocket on your next tax return. The income brackets are bigger, the standard deduction is higher, and the zero capital gain window is wider. These changes are officially here for the new tax year 2026, and it's huge news for millions of taxpayers. These changes mean you can pay less taxes on your next tax return. The new tax bracket lets you report more income at a lower tax rate. You also get a bigger standard deduction, which means less taxable income overall. And for investors, this got even better. You can now report more capital gain at a lower tax rate. As someone who studies every tax changes with the IRS, I want to break this down in simple terms to you. We will cover the new bracket, deductions, and smart strategies you can use right away. If we have not met, my name is Veronique. I'm an accountant, a tax strategist, and a business coach who's always looking for ways to keep more money in your pocket. Our mission is to take these new IRS rules and turn them into a clear action plan for you. Please click on the link and subscribe to continue receiving these videos. Let's start with chapter number 1. Why tax brackets matter more than you think. Most people get tax brackets completely wrong. They think if you are in the 22% bracket, all your income gets taxed at 22%. That is not how it works at all, guys. Our tax system is progressive, which means different chunks of your income get taxed at different rates. Think of a tax bracket like a bucket. First bucket gets filled with your lowest income and get taxed at the lowest rate. Only when that bucket is full does income spill into the next bucket at a higher rate. This continues until all your income is placed in the right buckets. For example, a single person earning $100,000 does not pay 22% on the whole amount. The first $12,400 get taxed at just 10%. The next chunk of $50,400 get taxed at 12%. Only the income above $50,400 start getting hit with that 22% rate. This is why understanding the exact bracket amount matters so much. When you know where this bucket starts and ends, you can make smarter decisions about your money. Now let's look at these new brackets and make sure you tell me in the comment section below what you think about these new changes. Let's start with chapter number 2. The new bracket for 2026, which is the single filers. Single taxpayer gets some great news with the 2026 bracket. The income limit for each tax rate have come up thanks to the inflation adjustments. This means you can earn more money before jumping to the next tax rate. The 2026 tax rates changed from 10% to 37%. This is why it really matters for most people, because on the first $12,400, they will get taxed at just 10%. Then income up to $50,000, 400 get taxed at the 12% rate, and income above that will jump to 22%. Now let's pay attention to the big jump, because this is where you can save the most money. The first major jump happens when you go from 12% to 22% at $50,400. That is a 10% increase, which costs you an extra $1,000 for every $10,000 in income above this point. The next big jump that gets expensive is from 24% to 32%. When you earn $201,776, this is an 8% jump that can cost you an extra $800 for every $1,000. Above this level, this isn't usually when people start calling for tax professional help like us. Compared to the original 2025 baseline, this bracket lets you fit about 2 to 3% more income into each level, thanks again to the inflation adjustments. Now let's go to chapter number 3, the new married filers tax bracket. However, for married couples filing together, the numbers are very, very different. Taxpayers that are filing jointly get to use much wider tax bracket. Think about it for a moment. A married couple can earn over $100,000 in their highest tax rate, and it's just 12%. That is an incredible deal, which will be affecting millions of families across the country. The same pattern continues of the income ladder. While a single person hit the expensive 32% bracket at $201,776 and a married couple does not hit it until $403,551. That is almost exactly double the income, which shows the huge marriage tax benefit. Now let's go to chapter number 4, the standard deduction and your next step. About 90% of taxpayers use the standard deduction, so this change affects almost everyone. The standard deduction reduces your taxable income dollar for dollar, which saves you money based on your tax bracket. So during the 2026 tax year, the standard deduction increased to $16,100 for single filers. And for the head of household filers, they get $24,150, while the married couples filing jointly get $32,200. This amount represents the enhanced level established under the One Big Beautiful Bill Act and continue with inflation adjustments. The higher standard deduction also affects people who itemize their deductions. Your itemized deduction now needs to be even higher to beat the standard deduction. With the 2026 tax deduction, we have a huge savings for singles and even more savings for married couples with the Big Beautiful Bill. We have one big question. Do I still need to itemize? With this new 2026 tax bracket, that itemizing your income and deduction is more important than ever. If you had a life change like getting married, starting a new business, or selling investment, you do need a professional on your side to maximize the new tax threshold. Click on the description to book a free complimentary 15-minute for your 2026 tax strategy session with one of our team at Mitsui Accounting.